Okay, me too.
Well, thanks everybody for joining us today. We're really excited to give you our presentation about Robinhood's current strategy and where they're going from here. Kind of the game plan for the day, what we're going to walk you through is we did a bunch of industry analysis to better understand the industry where Robinhood sits, how they're doing, and potential kind of weaknesses or problems that they're facing. So we'll walk you through a bunch of that analysis, how they've kind of been able to get their user base and where some of their struggles are lying. And then as we start going through, we'll give you 2 recommendations that we found align very well with the analysis that we've been able to do. And we'll prop up those analysis with good backing from the analysis that we have performed. So jumping right in, part of our industry analysis was just helping understand a little better the interesting financial situation and financial market that Robinhood sits. They were kind of a first mover to step into the beginner investor trades, where people had minimal trading experience with small monetary offerings. They've been able to be the first ones to step in with commission-free trading, and then have further differentiated from there, doing cryptocurrencies, fractional shares, and a variety of other things. Since then, there's been a bunch of competitors that have also stepped into that same market, that have kind of made the market much more densely populated with those competitors. And that competitor behavior has kind of ramped up over time, where all of those competitors now have free commission trading, and they're all starting to copy each other and share new features, which quickly is adopted by many of their other competitors. And I'll turn the time over to Adam to kind of walk us through further this industry.
Yeah, so Robinhood's got some interesting resources and capabilities at their disposal. Probably the most important, and we're going to dive into this one a little bit more in detail throughout our presentation, but they do have a very large user base, which has been quite the advantage for them. Their target demographic is kind of younger, a younger group of people. They've got great leadership. They've got great teaching, educational tools. Their app, their website is all like very well put together. And all these things have kind of come together to give them a really positive brand image for their users. And so those are some of their resources that they're rolling with. We thought it was important to indicate how Robinhood makes money. They're not a public company, so this is the best breakdown that we have available to us. But we're able to sort of deduce that it is in 2 segments. We've got the app users, which consists of their premium subscription service and consists of their earnings from cash, which Michael's going to go into in a little bit. And then they've got their stockbrokers, and their stockbrokers are getting rebates and discounts from the large number of trades that they're doing. And so, that's kind of how we have determined that they make their money. We did a quick 5 forces analysis. We found that there's really intense rivalry in this industry. There's a lot of substitutes. There's not a lot of barriers to entry, so it's pretty easy to jump in. And so those are some things to kind of keep in mind. We're going to go a little bit later into the compliments, but we kind of view this as maybe a positive for Robinhood here moving forward. In the pest analysis, the 2 quick things that I wanted to really hit home on. For economic, Robinhood is like a low resources freestanding company. An economic downturn could be devastating for Robinhood. So that's something to keep in mind, especially with some of the changes that we've seen recently with the coronavirus. Second of which is, just kind of the socio-cultural factors. The younger generation obviously is going to always be something that you need to consider when you're looking to expand and grow and kind of mapping out your business strategy. So that's something that is going to be important here moving forward. To give you a little bit of a roadmap on kind of, to wrap up where Robinhood has been and where they currently are. Robinhood was initially kind of first mover. They were doing something different that other people weren't doing. It was really easy to kind of use their technology. Like I mentioned earlier, their app's really awesome. They were the cost leader. They had their innovative platform, and all of this really helped them to build up a high volume of users, which is critical for their success both in the past and moving forward. Currently, as we hit on with the industry analysis, it's, there's low barriers to entry. They're struggling to differentiate themselves, which we're going to get into in a little bit. There's been some market struggles. And so, we're trying to figure out how Robinhood is going to survive. And so we see here the problem, that they basically had all these advantages and these resources and capabilities available to them initially. And now they're starting to see that kind of dry up a little bit. So, they're seeing that it's difficult to sort of maintain the differentiation that they had established previously. Here going forwards, as we've talked about, without further resources, and economic downturn could be fatal for Robinhood. So that's something to keep in mind here going forward. Now, I'm going to pass over to Jayon to go over our recommendations.
Okay, now we're going to introduce some strategic recommendations for Robinhood. So recommendation number 1, seek to differentiate. We recommend Robinhood to focus on differentiation. First of all, the cost advantage is gone. Everybody does free trades now. And second, people learn how to invest from Robinhood and they move on to some other more complex platforms with the knowledge and confidence they gain from Robinhood. Differentiation will prevent this graduate problem. Also, because of their resources, Robinhood had a few problems that damaged their image, and differentiation focus will help restore Robinhood's brand image. Finally, Robinhood needs differentiation to maintain volume of users in order to make profit.
So Robinhood has tried to innovate recently. They've launched cryptocurrency options on their app and online. They are going to launch fractional shares, and they have cash management. As Adam mentioned, they do make money from just the cash that is lying dormant in user accounts. Some other things that they've done are investor profiles, and UK expansion is an interesting thing that they're launching later this year, allowing people in the UK to trade United States on the United States stock exchanges. This is really the only unique attempt at differentiation. It's problematic because all their competitors have launched all of these similar things besides the UK expansion. So really Robinhood, like we mentioned, isn't truly differentiated currently. So a few ways that we suggest that Robinhood differentiate. First, we believe that they should socialize and gamify their investing platform. Second, really be the go-to education equalizer. They have really amazing educational tools that can help the beginning investor really feel confident in growing their wealth and making wise choices. And lastly, we believe that it would be beneficial for Robinhood to prop up their brand image as standing against the 1% and standing for democratization of financial markets. So first, socializing and gamifying investing. These are just a few simple ideas that we thought of. It's interesting, there is a large Reddit community already that is dedicated to Robinhood, where they share their stocks that they believe should be traded, so they interact with each other. This would be a true differentiation if they allowed this on the app for you to connect with your friends and teach each other and grow with each other and really grow your wealth together. This would draw younger users, get non-investors to begin investing for the first time, and really increase the lifetime value of a Robinhood customer. Second, to be an educational equalizer, first, they need to make their educational resources, which really are superb, more accessible and organized. This is vital for drawing back to one of the 5 forces that we mentioned about substitutes being a huge problem. Educating people, teaching them that substitutes really aren't as good of an option as safe stock market investments in a lot of cases, and for certain situations can help mitigate that issue of substitutes. Lastly, they have amazing podcast and emails that they're already educating really well, but they really can lean into this better. This is just an example of the type of opportunities that are there for Robinhood if they lean into education as a way to differentiate. As you can see, 10 years ago or 15 years ago, millions more people were invested in the stock market. And today, we have not rebounded to those numbers. And a big reason why is people are scared to invest, or undereducated about how to invest, and Robinhood has a great opportunity to grab new users as this grows. Lastly, we talked about positioning ourselves as the anti-1%. Robinhood's main vision is to democratize financial markets. They do an okay job of sharing that message, but they should really launch advertising to differentiate their brand from the stodgy, old person investing platforms for rich people. They're different. They were the first free platform, and they can lean on that to further attract younger users and differentiate themselves from their competitors, which is, again, talking about the 5 forces, mitigating that rivalry risk that we've talked about. And I'll hand it off to Caitlin to talk about our second recommendation.
Our second recommendation is for Robinhood to become an acquisition target. As mentioned before, there are big risks in the market, such as coronavirus, which present problems for Robinhood as far as remaining profitable. There's also stiff competition, which was mentioned before as well. And these two things combined make it difficult for Robinhood to maintain their large customer base and therefore remain profitable. However, they do have a large user base of young customers, which has the ability to be a great acquisition for a larger company looking to increase their profit and expand their user base as well. So recently, in the last few weeks and months, Morgan Stanley acquired E-Trade and Charles Schwab acquired TD Ameritrade. And these recent acquisitions seem to indicate that these two companies, or these 4 companies, when combined, have been able to acquire more assets and resources and create more synergies between marketing and user bases. Additionally, there are increased switching costs for customers or potential customers when companies like this have combined. So the company also becomes less susceptible to future risks, such as market declines. So how can Robinhood become an acquisition target? Currently, as we've mentioned before, Robinhood has a great user base of young millennials. They have a great user-friendly platform, and they have technology available. So Robinhood needs to look for companies that have that larger, perhaps older customer base, and the ability to provide stability in this tumultuous market, and resources that can allow Robinhood to continue capitalizing on what they do best at this time. So thank you very much. We look forward to your questions.